Singapore, this is Insight with Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Decision day for the Bank of Japan. With rates likely to stay on hold, investors will be keenly watching for updated economic forecasts. We have a panel of guests to discuss the outlook. Amundi head of equity, Hiromi Ishihara, is with us, along with former Deputy BOJ Governor Masazumi Wakatabe. Also ahead, the U.S. says the first round of trade deals are close and negotiations are going in the right direction. We'll get insights from former General Counsel in the U.S. Trade Representative Office. And Tesla reportedly begins searching for a successor to Elon Musk. As the EV pioneer CEO, long-term Tesla investor and Musk skeptic Gerber will be joining us with his verdict. Welcome to Inside, and we're awaiting that decision by the BOJ. It is highly anticipated it will stand pat at 0.5%. The focus is on the messaging in terms of estimates for growth, estimates for when Japan might get to that 2% inflation target. What's complicating matters really are two things: tariffs and, of course, the strength of the yen. It is the strongest currency in Asia, year to date up about 9%. Let's get insights. Bring in the Asia trade co-anchor Sherry Yan, who's outside the Central Bank's HQ in Tokyo. Sherry, we know that all 54 economists we surveyed expect the BOJ to stand pat, so the messaging, the projections are key.
Yeah, we're going to be watching that economic quarterly report about what happens to inflation forecast. Right now, the expectation from the BOJ in the last economic report was that the price forecast would be for that target to be achieved in the second half of the three-year outlook into 2027. Now, what happens next is the key question, with the Bank of Japan having really talked about the uncertainty surrounding trade due to tariff measures, signaling really that they would consider that and take that into account. The Nikkei reporting today that growth forecast might be downgraded to below 1% for this fiscal year. But yes, the expectation for the rate to stay at that 0.5% for second straight meeting.
Sherry, massive moves in the yen and the bond market since the last BOJ meeting. How is Governor Waseda likely to be looking at this?
We have seen the appreciation of the Japanese yen, as you mentioned, almost 10% year to date. That might give the BOJ a little
Sherry,
bit more
let me just jump in here. We have breaking news. We have that decision from the BOJ. Sherry, just let me jump in here with the BOJ decision. It has voted 9-0 to keep rates unchanged as expected, keeping rates at 0.5%. It says that Japan's real rate is at significantly low level. And in terms of reaction in the market, we're seeing the Nikkei 225 futures maintaining its gain after that decision. Again, the BOJ to raise rates if economic outlook is realized. Not surprising, Sherry.
Yeah, what's really catching my eye right now, the GDP growth forecast for fiscal year 2025 being downgraded to 0.5% from the previously forecast 1.1%. We had seen indications that might fall below that 1% growth forecast, is now at 0.5%. It's also interesting to watch the core CPI fiscal year 2025 forecast, that despite these trade uncertainties, the tariff, the hit to growth, that expectation is for 2.3%, so it's been actually upgraded. Remember, we've seen core CPI here in Japan surpassing that 3% year-to-date, year-on-year growth for the past 4 months, and now it's been even upgraded to the to actually gain 2.3% for this fiscal year. Take away energy as well, and you're seeing growth of 1.8%. So it's expected to slightly accelerate and then to decelerate in fiscal year 2026. The Bank of Japan saying that it's necessary to pay due attention to the financial and FX markets. We discussed how the Japanese yen had appreciated, although the Nikkei has returned to levels that it was at before the tariff announcements by President Trump early in April. The BOJ is saying that the risk balance for prices is on the downside for fiscal year 2025, 2026. A risk to prices skewed to the downside. That is interesting because in the previous outlook, it was actually skewed to the upside. Underlying CPI likely to be at the levels in line with the target. And we are now seeing, Haslinda, the yen actually take a little bit of a hit after the BOJ said that that price risk was now skewed to the downside. So those trade concerns might be really be reflected in this latest economic outlook and the fact that the BOJ did not move as expected today.
Sherry, thank you so much for that. Let's discuss the BOJ rate path and the market implications with our panel of guests. Masazumi Wakatabe is a former Bank of Japan Deputy Governor and currently economics professor at Waseda University. Also joining us is Hiromi Ishihara, Head of Equity Investment at Amundi, Japan. Thank you for joining us. Masazumi-san, let's start with you. I mean, not surprising that the rates were kept unchanged. We saw that downgrade in terms of growth projections, so much uncertainty to do with tariffs, as well as the overall environment out there.
Okay, the decision was as expected, so that there's no surprise here. The somewhat a little bit surprise is the upgrade of the inflation prospects, the projections. But I think that currently, I think the BOJ thinking is that they would like to decouple two things: the inflation dynamics and the real economic dynamics. So that I think they are worried about the price inflation dynamics more than the economic outlook, so the real GDP growth rate. So in that sense, I think that the BOJ can maintain that they are still on track to raise interest rates down the road. But I think there are some uncertainties, so they're going to have to admit them.
On track to raise interest rates down the road. The question has always been when. Do you see it in June, July, or given where the yen is right now, could that be later on in the year?
Well, I actually expected that this decision maybe in April this month, May. Due to the tariffs and other uncertainties, I think that they should wait and see. But still, my best guess is that July. We cannot exclude that July hike because that would also coincide with the issuance of the new outlook report. So and also lots of other things may be cleared. For example, tariffs negotiations may be settled one way or another. So that's depending on, of course, that depends on how the Japan can negotiate with the Americans. But I think that we can say that the July hike, 25 basis point, is a possibility. But I must say that from now on, that it's not that easy to raise interest rates. But I think that July would be a possibility.
July a possibility, and it is still a very uncertain environment. Hiromi-san, let's get your thoughts on it. Just recapping some of the headlines that we've been getting from the BOJ. It stood pat at 0.5%. It says extremely uncertain how trade policies to evolve, that the underlying CPI is likely to be at the level in line with target, and that it's pushing back its expected timing of price trend meeting its goal. Your initial reaction, Hiromi-san?
Well, as Wakatabe-san said, that we also expected that no big surprise coming from this month's BOJ meeting. But it's really a key component is to what going to be the next. And then I would say that the BOJ next hike could be June or July, even though the political calendar looks a little bit busy in the summer. Given the inflation dynamics, it's really fair for BOJ to make another action. But I would say it's only one hike this year because of the weak domestic consumption, despite the late wage hike that we saw from this year's Shinto.
So given what you have just said, it's fair to stay upbeat about the Japanese market, still bullish, you think?
I remain constructive in Japan equity. Of course, we have big uncertainty around the tariff talks with the states. So until we have more visibility of the real implication of the economy and then also the corporate capex planning for this year, in the short term, the market could be weighted down a little bit, but in the mid and long term, towards the end of the year, I still remain bullish on Japan equity because we should expect to see some corporate actions such as buybacks and also some business restructuring coming.
Masazumi-san, another headline here, the BOJ downgrading its assessment of economic outlook. You got to wonder, what are the downside risks to activity in Japan?
Well, you know, that's given the uncertainty and also the tariffs, remember that some tariffs were already implemented. So that now we have to think about the impacts of those tariffs and also the impacts of tariffs on the U.S. and Chinese economies. So that we're going to have some downgrade in the economic outlook. But I think that according to the current BOJ thinking, I think that they still think even the downgraded economic growth rate is higher than the so-called potential growth rate, so that they can maintain that the economy is not doing so brilliantly, but they can say, you know, still, they have no sort of problems about the inflation, about the monetary policy. So again, you know, that's there are some uncertainties. I think that's the IMF says the real growth rate for Japan for calendar year 2025-26 like 0.6. So that's maybe the BOJ's predictions are a little bit too optimistic.
But the fact remains that the economy is already impacted by the tariffs and the external environment. Has Japan responded enough to counter the risks?
Well, I think a lot depends on the policy responses and, of course, the negotiation with the Americans. So that's I can see the three scenarios: the good, the bad, and the ugly. So the good scenario would be, you know, that's no major tariffs imposed. And the policy responses are kind of enough. So you can, you know, change these parameters or the variables so that if the trade negotiations do not go well or the policy responses are not sufficient, then we should be worried about the good scenario to bad and the ugliest one.
Hiromi-san, the good, the bad, the ugly, what's your own assessment, especially on the back of the currency environment? We have the yen currently up about 9 to 10% versus the USD. It is making it really complicated and challenging for exporters in the country.
Indeed. So we are closely monitoring, even though we already expected the yen-US dollar trend to be appreciating rather than depreciating. However, it was the movement was really sharp. And also for this fiscal year's corporate guidance, we should expect maybe around 140, which means that we have little buffer coming from FX movement for the positive side. So I suppose that, you know, earnings announcement coming to the peak season in 1 week or so, we should expect that the company's guidance would be really conservative. It tends to be conservative, but we should expect it even weaker than the average years. So the sentiment would be a little bit weak, I suppose. But in the mid and long term, as I said, that is still constructive because the companies are really confident to pass the pricing for any hike in terms of the cost. And it's really, you know, we see the improvement in operating profit margin level. So the company fundamentals are still in a good shape. And unless we expect the sharp appreciation of Japanese yen against the dollars, I think the Japanese equities already traded at attractive valuation levels. So I see a little negative downside, even though the FX moved around the current level.
Might you have to reassess your optimism because of the headlines I'm about to read out right now? The BOJ says trade policies will have a large impact on sentiment. Trade will have a large impact on financial and capital markets, and that Japan's economic growth is likely to moderate on trade policies. These are negative headlines. Might you have to reassess even the projections of the earnings of the companies in Japan?
I tend to agree, but then it's always the Japanese companies' guidance at the beginning of the fiscal year conservative. But then looking at the domestic side, we have pile of the large project on the pipeline, and also we are facing a shortage of labor. So definitely the companies have the necessity to improve the productivity and then also ramp up the production. Of course, depending on how the tariff impacts on the real economy and then also the global economy, including US. However, I think the current valuation is already factored into a certain negative EPS for this year. So that said, that I remain that it's sort of constructive despite the negative headline that we have seen recently.
Masazumi-san, your thoughts on the yen? I mean, we've seen that strength unlikely to dissipate. In fact, some say that it is the dollar that's likely to continue to weaken from here. Might that impact how the BOJ views its rate path going forward? You were talking about how, there could be expectations of a rate hike in May, June, even July. I'm just wondering, might that be pushed back even further?
Well, I think that right now one of the major concerns for the BOJ policymakers is precisely FX movement. I am of the opinion that the monetary policy should not be directed to the FX movement, but the reality is that the FX movements would fuel some sort of public opinions about the monetary policy position. So right now, I think that the Japanese yen is not depreciating. So that, but when for example, the Governor Ueda or some members of the leadership, announce some kind of dovish sort of stance toward the monetary policy, that may lead to more depreciation rather than appreciation. So I think that they would like to avoid that. So we're going to have to take a close look at what the Governor will say in the press conference. My guess is that he's going to he tries to be as neutral as possible because he doesn't want to have a depreciation of the yen right now, and appreciation of the yen is also not good. But I think that the among two, I think right now that the BOJ may be worried more about the depreciating yen rather than the appreciating yen.
Are you as confident as Hiromi-san that the Japanese companies, Japanese corporates, Japan Inc. will be able to cope with the movements in the currency, given that they are global players? The likes of Toyota, Honda, they are global players.
Of course, the FX impacts on the earnings level can vary at the company level. Of course, a lot of the companies already have the business operations outside of Japan, which might not be 100% impacted by any FX movement. That said, the topics index companies, market cap weighted base, definitely export oriented bias. So we definitely need to be careful. But to some extent, that I'm comfortable that the Japanese company can be competitive enough with the JPY USD like 135 yen level. So we do not want to see the sharp, FX movement one way to another. But I remain constructive on the Japanese corporate fundamentals at this stage.
Masazumi-san, big debate about whether or not the BOJ will cut its bond purchases. Will it not?
I think they will, well, they can wait and see. But I think that they don't see any problems about the purchase of bond purchase, so the reduction of the bond purchases. So that I think they will maintain the course. But some could argue that the impact of the cutting the bond purchase on the long-term interest rate may have an effect on other things. But right now, the long-term interest rate is fairly moderate, so that they don't see any problem of cutting the bond purchases further. But I think that they keep asking questions to bond traders, and they try to do their best to soothe the market about the next the plan of bond purchase program.
And Hiromi-san, on balance, how do you play Japan? I mean, not too long ago, we were talking about how you should be buying bank stocks in Japan because of expectations. Rates were going higher, but the sector is down about 9%.
Yes, so we still prefer to play a little bit the domestic defensive side of the market until we have more clarity on the tariff talks. And then, for example, I still like construction, for example, that very huge the order book pipelines, which should help the company's earnings this year and the next fiscal year. And then also we start seeing the margin improvement of the major construction companies in Japan, as well as some positive catalysts coming from corporate governance reform. And the other side is, for example, software IT is also an interesting sector because, as I said, that Japan is really facing a shortage of labor, and then the productivity improvement is crucial for the business operation perspective. So still domestic play, but there are really good companies with reasonable valuation trading at this stage, offering the good investment opportunity. So overall, we prefer to stay in defensive under this uncertainty market environment. But also there are some export-oriented companies that already they have the decent U.S. business, and then also the production side is already in U.S. So it's less likely impacted by tariffs. So there are definitely bottom-up approach looking at the company's business model. And then really the market is really attractive level at this stage.
Great insights. Masazumi Wakatabe, former Bank of Japan Deputy Governor, and Hiromi Ishihara, Head of Equity Investment at Amundi, Japan. Thank you so much for those insights. Still ahead on the show, the Wall Street Journal is reporting that Tesla's board has opened a search for a CEO to succeed Elon Musk. We get reaction with high-profile Tesla investor and Musk critic Ross Gerber in just a few minutes. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. We're counting down to Japan's back from lunch. Of course, the BOJ kept rates unchanged at 0.5%. What was striking was that the BOJ cut its projection for growth to 0.5%. Remember, it was just 3 months ago that it had GDP at 1.1%. It did say that it's very concerned about those tariffs. It will impact sentiment. It will impact activity in the country. Bear in mind as well, all that coming at a time when the yen has strengthened. It is up about 9% versus the USD, and that will have implications on exporters in the country. Remember, the likes of Toyota, Honda, they are global players. Taking a look where we are in terms of the get-go from that lunch break, the Nikkei 225 maintaining its gains, currently up by 0.6%. Also the topics in positive territory. We have the yen trading at 143.50. That yen strength, some say, in our conversation just slightly earlier, may just ease somewhat in the coming months. The BOJ, of course, cutting its growth projection for the year to 0.5%. The yen in focus. Let's do a check on where we are in terms of Seven & I. Couche-Tard signing its NDA to access Seven & I's financial data. It is trading up by about 2.2% as we speak. Now, the latest on U.S. trade talks. U.S. Trade Representative Jamieson Greer says the Trump administration is close to announcing its first batch of tariff agreements. Greer told Fox News he expects the initial deals to be finalized in just a matter of weeks. Japan's chief trade negotiator, Ryosei Akazawa, is set to meet U.S. Treasury Secretary Scott Bessent on Thursday in Washington. Bessent says deals with 17 trading partners are currently in the works. And Chinese media reporting that the U.S. has reached out to Beijing to initiate tariff talks. This contradicts the Trump administration publicly signaling that it is up to China's leaders to take the first step towards de-escalating the trade war. And meanwhile, Beijing has removed sanctions against European lawmakers as it works to enhance ties with other nations. Russian media says President Xi Jinping will visit Moscow next week. Let's discuss the implications with our trade expert, Greta Peisch. She's a partner at law firm Wiley, Rein and previously served as general counsel for the Office of the United States Trade Representative. Greta, good to have you with us. I mean, so many trade negotiations are being negotiated right now. How optimistic are you? How fast can they be in terms of reaching some kind of conclusion?
Well, thank you for having me. I think the question is, what's the content of these agreements, right? We don't really have a lot of information as to what the administration is seeking to achieve in this very, very short time frame with a large number of partners. And so, the more ambitious they are, the longer it's going to take. If they can settle for agreements to agree, broad outlines in this time frame, then there's more room to come to that kind of arrangement in this very short period of time.
Greta, are we even clear about the objectives of the tariffs imposed by Trump? I mean, if you're not clear, and some say they're not, some countries say they're not, how do you even negotiate?
Well, that's exactly right. I think we're hearing different things from the Trump administration, various officials, even sometimes from the same officials. So you hear about tariffs, having reciprocal tariffs mirror each other between the trading partner and the United States. You hear non-tariff barriers. You hear concerns about the balance of trade, having high trade deficits with some of the trading partners. And you hear the desire to have investments come into the United States. At the same time, you also hear that maybe the administration is seeking to have that 10% tariff, which is in place with all countries except for China and Canada and Mexico right now, to have that stay in place as a source of revenue, perhaps, or of bringing manufacturing back to the United States.
We heard from Japan about how it wants to see some progress. We heard from India saying it is optimistic a deal is in sight. I'm just wondering if Asian economies actually have an advantage versus trading partners in Europe, for instance.
Well, I think it certainly seems like that's the case. And what we do know about the Trump administration going back to the first Trump term is that they had real concerns about the trade relationship with the EU. It was quite contentious in that first Trump administration with a number of trade irritants going back and forth. And that seems to be a through line with the second Trump administration, that they just aren't putting the European Union at the front of the line.
At the end of the day, it is really about the trade war between the U.S. and China. I know when it comes to tariffs and trade wars, nobody really wins. But at this stage, Greta, when you look at it, does the U.S. have the upper hand or is it China?
Well, right now it really feels like they're at a stalemate, right? We hear things, as we did today, about perhaps there's been outreach on one side or another, but they've really been in a staring contest and waiting for the other one to blink at this stage. And so in that sense, it's hard to tell who has the upper hand, who is going to be able to break through this logjam and make some progress and de-escalate the tariffs to a certain extent.
If you're forced to hazard a guess, do you think the U.S. will blink first? Some say that perhaps China is in a better position to counter the negative implications of the trade war, that the tariffs that we've seen over the past years have in fact made China's economy stronger.
Well, I don't think we know yet. There have been reports that China has relaxed a bit the tariffs that it has in place in the United States by carving out some products, allowing some companies to bring certain goods in without the tariff imposed on U.S. goods. The same thing's happened on the U.S. side, right? We've seen further carve-outs in the semiconductor and device space since the tariffs were first put in place. So you see a little bit of it seems like inability to maintain this huge wall on both sides. And the tariffs are really they don't have their maximum impact right away. You have goods on the water, you have goods in warehouses, so it's sort of a slow roll and build up to really feel the pain and the impact of tariff, and it's going to take some weeks to play out. The pain will be felt in some sectors more than others, and that will have a big impact on how the United States, in particular, determines whether they can maintain, most of this wall going forward. Even if China isn't willing to come forward and start those negotiations in the way that the United States is seeking.
What do you make of the view that perhaps China has a new playbook that we're not giving it enough credit for, and that may shape, influence the way it negotiates with the U.S.?
Well, it does seem like it's taking a harder line this time, right? And that it is less willing to show maybe weakness or flexibility in coming to the table, and that it feels like the second Trump term, and that the China may be perceiving it as being somewhat different than the first Trump term. They need to look at this as a new paradigm, a more aggressive strategy that we've seen play out so far. And, I think every country that is interacting with this administration right now has to make a guess and a judgment as to what that successful strategy is going to be for the medium and the long term. I think that one factor that China and other countries will think about is, well, if they are perceived to give in to this administration, what will that mean for future negotiations, either with the Trump administration or, another trading partner even? And so, it has broader implications even than the negotiations and the tariffs that are right before them today.
Greta, great perspective there. Thank you. Greta Peisch, partner at law firm Wiley, Rein. Well, it's been a trying time for Tesla bulls, with shares down 40% from December's high amid a backlash against Elon Musk's ties to the Trump administration. Now reports say the board has begun searching for a CEO to succeed Musk at the helm of the EV pioneer. Up next, we'll get insight from high-profile investor Gerber. Don't miss this. This is Bloomberg. You're watching Insight. The Wall Street Journal says Tesla's board has contacted executive search firms to begin the formal hunt for a successor to CEO Elon Musk. The Journal says the moves began about a month ago, with investors worried about the amount of time Musk was devoting to his cost-cutting role with the U.S. government. Musk last month said he'll pull back significantly from Doge and pay more attention to Tesla. That's helped shares recover some ground, but they're still down more than 40% from last December's record high. Well, joining us now is high-profile Tesla investor Gerber, CEO at Gerber Kawasaki. Roz, good to have you with us. What is this about? Is this about the board finally thinking that Elon Musk is a liability to his own company?
You know, it's hard for me to actually think that that's what's motivating them, because they've been so negligent for so long, ever since the Twitter merger, to be truthful and really protecting shareholder rights at Tesla. What I really think this is Elon accepting a reality that his future and his real focus and passion is in building XAI and not continuing to build Tesla, and finding a way for him out of this in a sort of glorified manner. So, you know, I don't think this is wholly on the board.
Just to put it out there, you called for Musk to be replaced about a month ago, and that wasn't the first time you've expressed that view. Are you confident it's going to happen, since you think that Elon Musk is also behind it?
What I'm confident is whatever's going to happen is what Elon wants to happen. So, you know, I think, as I said, that ultimately Elon's focus is continuing the race for AI. And if he doesn't focus on XAI now, he's going to fall too far behind some very, very tough competitors with, you know, Facebook and Google and Microsoft and Chat. So this is his, you know, arch enemy, you know, Chat, you know, and OpenAI. And so for me, I look at this as a way for him to gracefully exit Tesla, and he's looking for a way. And with Robin Denholm selling all of her stock as chairman of the board, I think she's on her way out. He becomes chairman, and they find a new CEO. And considering JB Straubel is the one talking to a lot of these investors, he's probably the one best suited to take this role, even though he wouldn't be an outside player. I think an inside player makes a lot more sense.
So apart from him, who could replace Elon? Some say that it should be a person just like Tim Cook did for Apple, because, you know, that kind of person would be able to perhaps take the company to the next level.
Yeah, unfortunately, they don't have a Tim Cook. And, you know, the relationship between Jobs and Cook and Woz was very unique. And that's why Apple is one of the most valuable companies of all time. So, you know, Elon had that a couple of years back, but he dismantled that team really to protect himself from this outcome. And so there really isn't a capable team to lead Tesla there, other than, as I said, I think JB Straubel is the most suited to. He's a co-founder. He's an investor. He runs a successful company. And if Tesla bought Redwood, it would make sense for Tesla. And then he could come in and be CEO. And that's the scenario I think would be best for everybody. But if the board is looking for an outside CEO, I think that presents lots of different challenges, because, you know, A, you got to work with Elon, and B, we want Elon involved, obviously, with the innovation of Tesla. It's just changing the image and the focus of the brand away from Elon and refocusing it on Tesla is really would be the goal. So maybe you need more a marketing type CEO. So this is a challenging position to be in, because, you know, Elon really created a situation where he couldn't be easily replaced.
Elon Musk did acknowledge that he had to pull back from that role at Doge. Take a listen to what he said recently.
Starting probably in next month, May, my time allocation to Doge will drop significantly. I'll have to continue doing it for, I think, the remainder of the president's term, just to make sure that the waste and fraud that we stop does not come roaring back.
Ross, clearly the damage has already been done. Can his pullback actually make a big difference? Can it recover from all the damage, bearing in mind the stock's trading at almost half the price before, and we saw first quarter results were like deeply disappointing?
Yeah, and I don't expect anything better in the second quarter either. And that's before we hit the recession, you know. So, you know, things aren't looking too good for Tesla. And this hope that the RoboCab is going to do anything for the financials is certainly not. So, you know, I think the damage is done with Tesla. So, you know, for Tesla to really fix its brand, it's going to be an incredibly challenging thing. And a lot of the damage is not related to Doge. It's more related to the daily tweets and insults that come from his Twitter that continually, you know, anger and enrage different groups of people that used to buy his cars. And so it's not so simple as just like, oh, I'm going to solve that. But if he's out, meeting with the right-wing groups in Europe to try to overthrow European governments and failing at doing this, this also doesn't help sell Teslas. So we have to start, not to mention Tesla can become a pawn with China in this whole trade war as well. So, Tesla's in a very vulnerable position of their own making, and it's not so simple as Elon going away and it's just solved. And him going away also means there's something else that's now missing too. So the question is, how do they balance this where he still has the innovation and the good part of Elon still working at Tesla, but changing the image back to being focused on what Tesla does best, which is electric vehicles, autonomy, robotics, and AI. So, once again, I've thought hours and hours about how they could fix this, and I'm still dumbfounded to how deep of a problem that they've created, which I don't think has ever been done in business history before. And I think people will study this for a long time to come, because I've just never seen any business that's been run like this ever.
So to your point, what are the prospects for Tesla then? Because not too long ago, Elon Musk was Tesla. Tesla was Elon Musk. And, the right to the top of the stock price was based on Elon Musk himself and what people thought he brought to the company.
Yeah, and I would argue that that would be true if you're an investor like I am in XAI. It's pretty exciting time, because that's where he's going to put his focus, and he's going to take this $100 billion company and turn it into a $1 trillion company, I guess is the goal. And so, what you don't see in the public markets is really happening in the private markets with Elon. And so my whole thing is, I think he's made Tesla successful, and in his mind, he's done his duty. His pay package got taken away from him, so he doesn't feel like he was compensated. And so I just don't think he feels, I've said in the past, like, he doesn't care about Tesla, and I don't mean it like he doesn't care about it because it's his baby. I'm sure he cares about it, but it's just not his focus. It's not his passion anymore. And I think you can see it just even in the conference calls. I mean, just, rattling off the same jargon and the same promises over and over again with no real improvement. And so, I'm really worried about Tesla's prospects over the next year. In one sense, they make these incredible products that have changed the world. And in another sense, they've turned off their entire customer base from buying these products. So, I don't know what to say, but there's a lot of other EVs that people are buying today. And you see it in California, where, at one point Tesla was 100% of the EV market in California, and today it's less than 50%. So, that's crazy to me, because it used to be like all you could buy was a Tesla, and now there's literally so many other EVs you could buy that people are buying more EVs combined than Teslas, and Tesla created the market. So I'm excited Tesla was successful. We have EVs everywhere, and it's great for the environment, but I'm sad because I feel like this great company has just been left out to sea without a captain, and the captain doesn't really want to come back full time, even if he comes back,
Ross, with a big question mark about the prospects for Tesla, what do you make of the valuation of the company right now? Yes, it's come down from its peak in such a huge way, but is it still too expensive? Is valuation still too high, given that you're unsure where the company is headed, and you're not even buying into the robo-taxi story?
Right. And so certainly if you look at financial metrics that most financial people use, Tesla doesn't make any sense at 157 times earnings with lower earnings coming, So comparing it to NVIDIA at 25 times earnings, or Microsoft with just incredible numbers that just came out after hours, just really strong financials, trading at 30 times earnings, so if Tesla traded at even a premium multiple to the Microsoft and NVIDIA is at 40 or 50 times earnings, the stock would decline substantially from where it is today. So that's the risk with Tesla, is that the valuation doesn't make any sense. This is just an investment on hope that robotics and AI are really going to drive this company over the next decade to this massive future. But it's a hope PE. It's not based off any fundamentals. And there's a few stocks in the market like that today. So I caution investors, obviously, we don't short stocks, and I would never short Tesla, that's for sure. But and we're long Tesla, but we're sellers of the stock over time, and we have been for many years, and we continue to sell the stock, because we had so much of it, and that's where we're at with the company. So if I can get a premium for the stock, and you don't have a lot of faith in the future, and you're worried about tariffs and Trump, Tesla's a pretty easy stock to sell in the portfolio.
So you've been selling Tesla. What have you been buying instead?
No, I haven't been buying Tesla for a long time,
No, what other EV companies are you looking at? If there's an alternative, yeah.
Truthfully, this is the most conservative that I've been in a long time. I'm very concerned about these sets of policies causing a recession. And so we're underweight, for me, typically, U.S. equities. Now, we're still buying things that aren't tariff related, like our top holding Netflix just had a blowout report. Netflix isn't affected by tariffs. We have stocks that we like a lot, like that have no relationship to tariffs at all, and especially foreign stocks, which we're adding to aggressively in Europe, as well as the bond market seems like a pretty obvious place to put money today, where I can still get very nice yields, and with most likely yields going lower over the next couple of years as we hit a recession, bonds seem like a short-term security. So what we're advising our clients is to be very, very widely diversified right now and not overweight U.S. stocks, and still having U.S. positions, but just understanding that there's a lot more risk in the markets today than I would say in any time I've seen in a long time.
Right. Ross, very quickly, just a one-word answer. Where do you see Tesla headed by the end of the year?
Well, once again, if you go by
Stock
traditional
price.
valuations, it's going lower.
Ross, thank you so much for joining us. Ross Gerber, CEO at Gerber Kawasaki. Now, before we go, here's a preview of tomorrow's show. We'll have market analysis with Goldman Sachs' Salman Niaz. That's as investors continue to keep an eye on trade talks and look ahead to the latest U.S. jobs numbers. And that is it for Insight. Horizons Middle East and Africa is next. Do keep it here with us. This is Bloomberg.